Did you miss the pump? Well, don't freak out. Q4 could still make altcoins explode. Some of them anyway. The charts, the liquidity flows, the market cycles all point to huge moves coming, and they're not going to wait around for anyone, and the time to buy is, well, probably already largely past, but there's still some opportunities out there. Stick around as we break down 7 reasons why this quarter might be your next best chance to catch massive gains. And of course, lock them in, because if you don't take profits, the market will take them for you. It's very good at doing that. Reason number 1. You've probably heard it 1,000 times already. Uptober, the magical words. October plus up. Uptober, baby. The magical word that sends every trader suddenly into euphoria, forgetting how brutal, of course, markets can be and how whacked Rectember was. And guess what? History backs this up. Since 2013, Bitcoin has closed green 10 times in October. According to CoinGlass, the month has an average return of 20% and a median of 14%. That's not just meme energy. That's a legit seasonal pattern that traders have learned to front run. That's not all. If you zoom out, Q4 as a whole averages nearly 80% gains. Like, what? That's crazy. Where else can you get 80% return in 3 months? This is crazy stuff, man. This is why October isn't just hype. It's usually the spark that lights the Q4 fire on almost all crypto assets. And here's something even spicier. Every single major cycle top has happened in a Q4. 2013, 2017, 2021. It's all the same. Now, I know what you're thinking. Yeah, this cycle might be longer, right? Yes, I think that it will be, but it doesn't mean we can't have a major local top coming in Q4 of this year. Because even if we do have the extended cycle thesis play out, the data still screams of at least a major local top before the year end. Number 2, Bitcoin just blasted to a new all-time high of $126,000, and historically, Bitcoin pumps will lead to other things moving too. When Bitcoin flexes, altcoins usually are not too far behind, although they've currently been lagging. If you've been around for at least one full cycle, you already know this chart, the legendary path to altcoin season, the one every crypto GGem probably has taped above their bed at some point. It shows how the flow of capital usually moves. First, Bitcoin makes a move, then Ethereum makes a move, then you have the large caps like BNB and XRP, and finally that glorious altcoin phase comes in, where portfolios go vertical and people start quitting their day jobs, all before it crashes down to nothingness again. But Lark, Ethereum's lagging pretty hard right now, right? Yeah, I know, I've seen that. Look, talk on the street, Ethereum's dead. Anyway, we have to send that old relic to the recycling bin, right? I don't think so. This cycle is just not over yet, okay? So maybe, just maybe, Ethereum deserves a few more chances. It's going to go to 7K on the next rally. It's probably going to be the next local top for ETH. And who knows, maybe this time it's not going to be Vitalik's baby leading the charge. Maybe it'll be CZ's BNB, which kind of has been picking up a lot of attention recently. Maybe decentralized AI is going to come back, man. Look, it's too early to call, but if history rhymes, the money rotations we've seen for years will continue to play out. Narratives will continue to pump. The problem is that probably not all your coins are going to equally pump. You have to be in the right altcoins. What's getting narrative, what's getting hype, what's getting attention, what's getting bid right now in the market. Number 3, as we talked about earlier, October is when Bitcoin usually kicks things off. When that happens, it tends to suck all the liquidity out of the room. Great if you're sitting on a fat stack of Bitcoin, not so great if you swap the house for dog coins. And to be fair, a lot of meme coins are simply never going to come back. So look at your portfolio with honest eyes, guys. When Bitcoin dominance rises, it's like a sponge soaking up all the capital. Money piles into BTC first because that's where the momentum is and the safety is. But here's the thing about sponges. They can only absorb so much before they start dripping out the side. And when they do, all that extra capital, all that extra liquidity starts flowing down into altcoins. So don't panic if October feels a little bit flat for some of your favorite altcoin projects. Historically, that lag is normal and often the calm before the frenzy. So take a look at Ethereum's 2024 chart. It moved mostly sideways through October and then ripped higher for the rest of the year. Same story in 2023. If you check the total 2E chart, that's the total crypto market cap, excluding Bitcoin and stablecoins, okay? It paints the exact same picture. October, sideways, November, boom. It was also the same deal in 2023, okay? If you look back even to 2020, feels very reminiscent of that time where Bitcoin started moving, everything else started pumping massively after that. Of course, it does not all happen at the same time, but if history is any kind of guide, the odds are high that we'll see some fireworks once October moves over and passes the baton over to Moonvember. Now, before we get into the next reason, guys, will you keep settling for less, or will you start taking control of your cryptocurrency trading? Look, FEMX is the OG cryptocurrency exchange that delivers what traders need: deep liquidity, global access, meaning available to anyone, anywhere. That's you. You might need a VPN in some cases, and respect for your privacy. The offer on the table right now is outrageous. Make your first deposit of $5,000 or more, and they're going to hand you back $1,000. That's right, deposit $5,000, get $1,000 back. That's an insanely aggressive offer, one of the best I've seen in a long time. Link down below, you can get signed up, okay? Plus, they also have an insane trading bonus. The more you trade, the more cash they're gonna put back in your pocket, basically, with the top reward being 1 Ethereum, which is over $4,000 at current prices. So will you make the switch today to an exchange that actually pays you to trade? Link down below. Sign up while the deal lasts. Reason number 4, liquidity isn't just rotating. It's building pressure in DeFi. According to September data, lending protocols now hold over $130 billion in locked assets. That's more than at any point in crypto history. Now, why does that matter? Because when coins get locked, they leave circulation. Fewer tokens floating around equals less selling pressure, and it doesn't stop there. That's not to say these can't exit the lending protocols, but generally when these go in, they don't move out very quickly. Most of the locked capital is being reused as collateral to borrow more crypto. That's leverage. Leverage is rocket fuel. Obviously, on the way back down, it's burning rocket fuel that consumes everything in a horrible fire, but that's for later us to worry about, okay? Anyway, the leverage amplifies both upside momentum and speculation, as well as downside momentum and devastation later. But right now we're on the upside, so that's exactly what we want to see during an altcoin rally. It's fueling the rally. In short, people aren't just buying tokens and holding them, they're deploying them. That means conviction is back, liquidity is flowing, and capital is multiplying inside the system again. So yeah, well, everyone's distracted by meme coins and politics. DeFi is quietly building the pressure that could send altcoins absolutely flying when the next spark hits. Number 5, perpetual swap decentralized exchanges, or perp dexes. They just hit 1 trillion in monthly volume. That's trillion with a T, and that's a big deal because perps equal leverage. Leverage equals people are borrowing to trade bigger positions. That's why Hyperliquid and Aster and even OGs like PancakeSwap have been moving like crazy recently. When traders start using borrowed money again, it means that the risk is worth it. High perpetual swap volume also means deeper liquidity and tighter spreads across the board for coins, making it easier for capital to move into altcoins more broadly. In other words, the market isn't just alive, it is pulsing with speculation again. And when leverage starts flowing, altcoins are usually the next stop. Number 6, look, we make a lot of bets in crypto, and so far, this one takes the cake. Prediction markets are quietly on fire, and they might be the most underrated crypto narrative heading into Q4, and you can't really get any exposure to them yet, which is the problem. Polymarket, once known mainly for its 2024 US election wagers, has officially gone institutional, landing a $2 billion backing from the Intercontinental Exchange, or ICE, which is the parent company of the New York Stock Exchange. It's a very, very big vote of confidence into the crypto market more broadly, particularly into prediction markets. It also means that capital is continuing to flow into the cryptocurrency market, and this is a major bit of credibility for us. With ICE stepping in, Polymarket is preparing for a US expansion. That could open the floodgates for regulated on-chain speculation. Even crazier, volume on Polymarket and Kalshi are now higher than during last year's election season. People keep piling in. Think about it, the biggest political betting event in the world isn't even the top anymore. The space is growing without the election hype, powered by new users coming in on betting on everything from, I don't know, Taylor Swift to earthquakes and aliens and everything else, man. It's crazy. Higher liquidity, institutional grade infrastructure, it's happening. Polymarket also uses USDC on Polygon, meaning that all of this fresh volume is driving real on-chain utility, fast, cheap, regulated stablecoin transactions that feed back into one of crypto's most active ecosystems, okay? And here's the macro angle. Around 1 in 4 Americans already gamble online. Combine that with tokenized prediction markets to let them gamble on literally anything and on-chain liquidity, and you've got something far bigger than just a niche. This could bring millions of people back into the market. Okay, so I wouldn't be sleeping on this if I were you. There's actually a lot of interesting markets over on Polymarket to trade. Unfortunately, you can't buy Polymarket yet, but man, when that token comes out, watch out. Number 7, and speaking of sleep, here's a sleeper narrative that's quietly turning into a beast: decentralized AI. Well, everyone's watching NVIDIA hit new all-time highs basically every single week. The same AI hype is starting to trickle down to crypto again. And it's been here in multiple waves, and it will continue to come in waves of massive speculation and massive dumps, because we always do. We can't just do things normally, can we? But unlike the stock market, the crypto AI vibe, it's not just hype. Projects like BitTensor are showing real usage, real revenue, real adoption. I don't own that, by the way. If you want to see my full portfolio disclosures, it's always right down below, but we're just highlighting it as one of the big AI plays here. Currently running 128 subnets, powering everything from fraud detection to on-device AI. Subnet counts up 50% this year, active wallets up 28%, stake Tau up 21%. The ecosystem subnet tokens now approach $800 million in value. Institutional players are noticing too. BitGo, Copper, Crypto.com all have joined as validators within the ecosystem, signaling growing confidence in decentralized compute as a new Web3 revenue layer. And I think this will be big in crypto. AI, decentralized GPUs, decentralized data storage, all that kind of stuff has massive potential. So as AI hype keeps running hot, crypto's decentralized AI verticals quietly proving product market fit, and it's growing all the time with real networks, real users, and real value being created on chain. So when you piece it all together, Bitcoin, of course, leads the charge. You have all these things brewing in the altcoin market, from AI, and we didn't even talk about the meme coins and all that kind of stuff, prediction markets, DeFi roaring back, all that stuff is good for the altcoin markets. The fundamentals keep getting stronger. Q4 is shaping up to be one of the strongest altcoin stabs we've seen in years. Leave it to the markets, probably just totally cuck us anyway, because we're all expecting it to happen. Hopefully not. Everything is lining up. It should, in theory, work out. Fingers crossed. So look, the time to buy top altcoins was earlier this year. There's still some nice opportunities around in the market. Try not to top blast everything, okay? Just don't let the FOMO take over. Narratives are just starting to spill into the mainstream. Momentum like this rarely fades overnight. In fact, we probably have an extended cycle with all the momentum carrying us well in 2026. So if you're in, it's time to stay sharp. If you're not in, don't buy on massive pump days. Buy on pullbacks, okay? Always ask yourself that question. If this asset pulls back 50%, do I still really want to buy it? Think about it. Thanks for watching.